After gold's recent correction, our next guest says that the metal has come back towards its mean. Joining us today on Kitco's Gold Report is Frank Holmes, CEO of U.S. Global Investors. Frank, good to have you back on.
It's great to be here. And as you recall, back in mid-April, we didn't know what it would be, and gold was well overextended. It was up 2 standard deviations, and we said it's due for a correction. And now it's down almost half a standard deviation and getting close to that June 5th when Ramadan starts. And usually that's when you're beginning the love season, the love trade.
So, Frank, you have told me in the past that, look, 70% of the time, an asset class can move up or down a specific amount over various time periods, and that is a non-event for gold to go up or down about 20% in a year. So gold swings here are not a concern to you?
No, and the other important point is the daily swings, 70% of the time for gold, is plus or minus 1%. Silver, plus or minus 2%. And when we take a look at over a month, the numbers for gold jump 5%. But gold stocks are always double what bullion is to triple what bullion is. So there's much greater volatility in the gold stocks.
Well, I'm happy you brought that up because that's my next question to you. You're right. There is much more volatility in the gold stocks right now. So are you liking the gold miners right now? Would you choose that over bullion?
I like them. As you know, I've always advocated 5% into bullion and 5% into gold stocks and quality gold stocks. And I think that the gold stocks are acting, very well as countries' currencies like the Canadian dollar, the Australian dollar get weaker, or the South African rand. Their gold producers have a huge competitive advantage, and so those stocks are starting to reflect expanding profit margin.
So, Frank, what can we expect from gold? Do we really need to wait for the next FOMC to see a change here?
Well, I think psychologically, it went up that people thought 50% probability of rates going to rise in next month or this month. Now it's down to 20%. The future market says 50%. I believe a rate will take place, increase in July, and then it goes up by 10% a month that rates will rise. So I think that that's a key factor. When it comes out the rates aren't going to rise, then I think you get a resurgence in the price of gold.
All right. Well, news-wise, today and Friday seem to be the busiest days for the markets this week. The ECB meeting today has just concluded with no change in interest rates. So what's your touchdown pass going to be? I have an idea what I think you'll say, but what's it going to be, Frank?
Well, PMI this past week, with lots of data points, just does not show robust global growth in manufacturing, which is critical for demand for energy and for basic materials and gold. And I think the next factor looking for tomorrow is going to be employment. Will that change, and will the slowdown that's been seen in the charts, if you look at the employment numbers, they've been sagging, and I think that that'll be key for the threat of rates rising.
Yep.
If it gets worse, not better, then you'll see gold rally.
All right, we'll see what's in store tomorrow. Thanks so much, Frank.
And I wanted to share with all our listeners that next Thursday, we're doing a special webcast with the World Gold Council and ourselves, with the CEO of the World Gold Council. And we're going to talk about the trends in gold globally and what we see in the past going into the future over the next year.
All right, look forward to it. Thanks so much, Frank. And thank you for watching. We'll see you all tomorrow.